All right, welcome to Talk Tickers. Today we are jumping right into the Williams Companies, ticker WMB, and their Q3 2025 earnings. Now the headlines might tell you one story, but we're going to peel back the layers and see what's really going on with this stock. So on the surface, things didn't look great. You see the numbers, you see the stock reaction, it feels like a classic disappointment. But here's the real question we need to ask, the one that's at the heart of our whole analysis today. Is this just a simple headline miss? Or is the market completely overlooking a massive strategic shift that's happening right under its nose?
Okay, let's get right to the raw numbers. The street was looking for an adjusted EPS of around 51 to 52 cents. What did Williams deliver? 49 cents. A miss. And on the revenue side, analysts wanted to see about $2.96 billion. Williams came in just shy at $2.92 billion. So, yeah, a miss on both the top and bottom lines.
And what happened next? Well, exactly what you'd expect. The market saw those misses and bam! The stock took a hit, dropping over 2% in pre-market trading. It's a textbook reaction, right? But, and this is a big but, that is absolutely not the whole story. Not even close. All right, so let's do exactly that. Let's peel back that headline and look under the hood at the actual engine driving this company. Because what we find there is a completely different story.
Okay, so forget the EPS for a second. Let's talk about adjusted EBITDA. This is a key metric. It kind of shows you the raw earning power of the business. And get this, despite the miss, it was up a whopping 13% compared to last year. That's a huge deal. This is our first major clue that something really strong is happening operationally. And it wasn't just growth. We're talking about a record-setting quarter here. $1.92 billion in adjusted EBITDA, a new company record. So how'd they do it? Well, they've got new projects firing up and they're pushing more volume through their system. The main point here is simple. Operationally, this business is absolutely humming.
So, you're probably asking, how can you miss earnings but have a record quarter operationally? Great question. And the answer is, they're in the middle of a massive strategic pivot. Think of it like this. They're moving out of the risky up and down world of commodity prices and into the much steadier, predictable business of being an infrastructure toll road. It's all about stable, long-term cash flows.
And here's the playbook for how they're doing it. They call it their wellhead-to-water LNG strategy. It's a three-step dance. Step 1, sell off the risky upstream stuff. They're divesting their Haynesville assets. Step 2, build the critical link. They're partnering up to build a huge pipeline that's already fully contracted for 20 years. And Step 3, own a piece of the destination. They're buying into an LNG terminal, again supported by these fantastic 20-year take-or-pay contracts. And those are golden, because it basically means Williams gets paid whether their customers use the gas or not. It's a huge de-risking move.
But wait, there's more. The other half of this pivot is what they're calling power innovation. And you know what that's about? Data centers, AI, the cloud. All that stuff needs a mind-boggling amount of power, and Williams is stepping in to provide the natural gas infrastructure for it. We're talking about a $5.1 billion project backlog here. And just like the LNG strategy, it's all about locking in long-term, predictable profits.
Now, usually after an earnings miss, you'd expect the management team to sound a little, cautious, maybe a bit defensive. But not these guys. No. What we heard on the call was the complete opposite, pure confidence in their growth plan. And they didn't just talk the talk, they walked the walk. They reaffirmed their guidance for the full year. That means they're still expecting to hit their big targets for EBITDA and EPS. And get this, they actually raised how much money they're going to spend on growth projects. That tells you everything you need to know. They see a clear path forward and they are not afraid to invest heavily in it. And the CEO, Chad Zamarin, really put a fine point on it. He basically said, you think the last 5 years of growth were good? That was just the opening act. The chapter we're heading into now is going to be even more exciting. That's a powerful statement right there.
Okay, so we've broken down the quarter. We understand the big strategic pivot. Now for the million-dollar question. What do we do with this information? What does it all mean for the stock going forward? Let's get into our call on it. All right, here's our official rating. We're calling this a market perform. Now, you might be thinking, wait, after all that good news? And yeah, the operational story is fantastic. The strategy is smart. But the market already knows a lot of this. The expectations for Cleveland's are pretty high, which is exactly why a tiny little miss can cause the stock to drop. A lot of the good news is already baked into the price.
But that doesn't mean there isn't an opportunity here. We actually see a pretty interesting tactical trade. The idea is to go long heading into the first quarter of 2026. Why then? Because there's a huge catalyst coming up.
their Analyst Day in February. That's when management is going to lay out the entire long-term financial plan for all these new projects. Our thesis is that the market still doesn't fully appreciate just how stable and durable these new cash flows are going to be. A killer presentation at that Analyst Day could really wake Wall Street up and cause a major re-rating of the stock. So what do you watch until then? Simple. Keep an eye on how well they execute on these projects and any new announcements that add to that backlog.
And of course, as always, please remember this is not financial advice.